competitiveness in lending is probably a good thing for most real estate investors.
Dylan added like 3 notes, so they're not like real notes. And to be fair, I mean, I don't know. What's the news of the world? It doesn't change that much week to week. That's why South Park has started doing like 2-week episodes, because they need more time to create actual commentary on the bullshit.
Oh, they're every other week now?
They are, but
I need to watch them. It sounds like an exciting new season. They're
just fully going after the Trump administration in every way possible. Although my favorite character is the Vance little like minion that they have. It's fucking hilarious.
Oh, Vice President Vance.
Yeah. What's going on, guys? Welcome to the Collecting Keys Real Estate Investing Podcast. You got the full gang here today. Mike DeHaan here with my co-host Dan Austin and Dylan Cook, the kid from Ohio. And we are here first week of September talking business, real estate investing, and whatever else we feel like for today. Yeah.
Hold on, Mike. I'm sure have you seen the South Park skit where they make fun of real estate agents?
Oh, yeah. Totally. I mean,
like,
that's
my mom's a real estate agent. She's an effing retard. I was like, oh, God, it's so funny.
Yeah. Like Cartman, his mom was like, I got a clip on that.
Yeah. So, well, cool. We'll edit that for YouTube. Drop that in the first 30 seconds, Dylan. Although I guess this is Trump's America. You can say that now. It's funny. I saw this stand-up comics. He was talking about single cause voters. And he was saying about how so many people, they voted red purely because they wanted to own the libs so they could say the R word again. And he's like, and that was like their whole thing. It's like they didn't care about the economy, they didn't care about anything else. All they wanted was to be able to say the R word. So, and now like the same people, they're posting about how, you know, they're not making as much money, like the state of the economy, the tariffs, all those other things. And I just want to look at them and be like, was it worth it, you retards? Great punchline. Great punchline.
Oh, boy.
But anyways, cool. I won't go too political today. How's business going for you, Dylan? I know that you posted on here that you've been getting hit up by lenders a lot, which is funny. And I can tell you why that's happening.
I mean, it's literally like multiple calls a day. And I hate to be rude, and I get the cold calling, like we even do it, but I'm just like, I have a good lender. Thanks. I'm not interested. Bye. Like, yeah. I don't even get the time of day.
You're like, I work with Sir Lenz a lot. They're based out of Washington. They're a fantastic lender. Great couple guys own them. Is that what you say?
Every conversation that is the same. If I ever string it out, like if I'm in the car and I don't have anything else to do, okay, what's the rate and terms? How many points? Yeah. Origination fees. And they're all the same. 12 and 2, 75% LTV, and they need an appraisal and a credit score. That's all the same.
So the reason that you're getting a lot of that is twofold. One is because loan originations in general are down, not even because there's less transactions, but because there's less purchases rather, but there's less properties that are selling. And so kind of the lender model revolves heavily around having recurring clients if you're in private lending, right? And if your recurring clients are not able to sell their inventory, they're not going to be getting more loans because their books are eventually going to get too overloaded, right? So that's one part of it. The second part is there is this trend in the lending space right now where you see people that are building out these models. I don't even say right now. It might have always been this way. I'm just new to the space myself, where they have these models where they are building out these teams of loan officers or brokers that are entirely commission-based or very heavily commission-based. And how it works is after a certain period of time, they have to eat what they kill. And so they're out there heavily prospecting, trying to find opportunities. And the reason that they're all priced the same, because it's a perfectly competitive market and there's only so much margin that you can have on your pricing. But the highest pricing is always going to be through the brokers or the LOs because they're having to pad on their commissions on top of whatever their strike price is with their fund provider. And so
that's a symptom though. It's because it's the only place that there's yield for big money.
Absolutely. 100%.
Right? You know, where are they going to get that from? They can invest more money in the Fab 7 or whatever they call those guys, or they could get some real estate exposure and give their investors a consistent 6 to 7%. And that's what they're doing. And so then all these dorks like us are out there making money.
Totally. And in general, if you are ever getting a loan, you should not work with a broker because they're going to go and they're going to mark you up a significant amount and they're going to shop you around. You should always go directly to a lending company. And ideally a small one like Sir Lenz a lot, not even to plug us, but smaller companies, we do have less overhead. And so we do tend to beat out a lot of the bigger groups because we are not having a line of brokers and loan officers that are needing to have their commissions built into our loans. So we can just naturally be a cheaper option, especially if we have lines to the cheaper money on the back end, which if they're a decent lending operation, they should be able to get that, whether it's via their own fund or it's via their own hustle and just making connections. But anyways, that's why though. It's just a symptom of the marketplace. And it's, I would say, a chain effect of the slowing down real estate market as stuff is just sitting a little bit longer and their recurring income is reducing.
Yeah, I mean, it makes sense. And then the competitiveness in lending is probably a good thing for most real estate investors, because I mean, you can really only compete on points, interest rate, and I guess, some of the upfront costs, like origination fees, that kind of stuff.
Yeah.
Well, especially like the whole industry is feeding like a couple of funds that basically buy all of the private debt. Like if you go far enough down the chain, regardless of who does your loan, whether it's, a small shop like us, or it's Kiavi, or it's, Lending One, or whatever the other big companies, right? All is going sold to the same person if you go 2 or 3 slots down the chain.
Yeah. It gets sold a couple times and then it ends up in Wall Street.
Yeah. And then there's like 3 sales processes that go down the line, right? Because there's the Wall Street like base, they kind of set the pricing. And then there's going to be the ones below them who are selling it there that's going to have their margin they need to make. Then there's going to be the ones below them who's probably the investors that are feeding the companies that you start with, right? That you end up talking to as a real estate agent. And there's going to be the LOs below that who work for the companies. And so you have the LO that's basically pitching you the pricing. Then they take that pricing and have to go back to their company to get approval. And they will basically massage things on their end, because then they have to go to the larger investor who has to massage things on their end, who then goes to Wall Street. Right?
I would look at it this way, to simplify it, like to what you're saying, Mike, is like, you have like the LOs and you have the smaller companies as well, like Sir Lens a lot. Then you have like platform companies where they are like a Kiavi, because they have a very good platform for like them to intake loans. And then you have like the aggregators who then take $100 million of those loans. And then they have the hedge funds. Like, it's like, those are like the tiers, you know what I mean? Like there's like purpose for all of them, because the hedge funds, they don't know how to freaking do real estate. And some people are like really good at software, so they build a platform, and other people are really good at aggregating these platforms outputs and like securitizing the debt and then selling it off.
Yeah.
It's like those are the tiers.
And to relate it to like a real estate business specifically, at the very bottom, you'd have the seller, right, who's getting the lowest strike price on the deal. Then you're going to have the wholesaler who has their price, right, and their margin they're selling it to a buyer for. And then you're going to have the buyer who is selling it to the retail buyer and or the full market value after it's completed. And so it just kind of like goes up. But, because at the end of the day, the seller could have done that process themselves. They won't. Just like the hedge fund could have gone through that process themselves of finding the debt and making more money. That's just not what they're in the business of doing.
It's another good example of how many tentacles that real estate has in the economy, right? All different.
Totally.
So many people feed the economy. Like real estate feeds so many people in the economy,
right,
rather.
Exactly.
They're title companies, wholesalers, lenders, LOs, like so many people.
Contractors, right? Like just general homeowners. Like how many homeowners, baby boomers, older people have the entirety of their net worth in their home?
A lot.
So many, right? Like that has to be probably the financial cornerstone of the United States.
Or the second, there are second homes too. There's a lot of baby boomers that have like 2 homes, and they're millionaires just from those 2 things, right? They don't really might have liquidity, or maybe not a big retirement account. But right now, the quote unquote search for yield is one of the biggest problems in the investment space, no matter what avenue you look at, bonds, real estate, because everything's really at all-time highs.
Mm-hmm.
So where do you try to allocate your capital to, especially with a lot of people thinking that the sky will be falling,
Dan and I were talking about this morning. And like, specifically with stocks, and how stocks are no longer about like finding undervalued companies. And it's all just about like, where's the money going to flow to? And that's what's going to drive stock value. There's some of these extreme examples, like Palantir is a big one that you come up a lot, where currently it's being traded at like 690 times its earnings
potential. Yep.
It doesn't,
that's in my opinion, though, it's like a government subsidy, because that's what people are looking at, is they're going to be one of the next General Dynamics, right? And so that's being manipulated.
It is.
That's Palantir. You can find examples like that all over the place.
Of course.
Costco's another big one that trades at like 400 times earnings.
Yeah, like, it just doesn't make any sense. But the funny thing is like, even if you zoom out, do you know what one of the best performing stocks is over the past 5 years? I don't know if it's like the best one, but it's pretty damn close.
I know. I just saw this circulating on my X too, so it's probably the same example. Build-A-Bear and also Domino's and Monster Energy drinks. All 3 of those.
Yeah, Domino's. I saw that one too. Yeah, Build-A-Bear was the number 1 over the last 5 years, and it's had like 1,700% growth. It's gone from
Pretty
like $2 to like $68 since.
Yeah,
since
it outperforms things like Nvidia, Tesla, like some of the big.
It's kind of crazy.
But you know what the funny thing is? It like companies like that, right, are so unsexy. But that growth on that is literally going to be based off of the growth of the company or the reinvestment of the company, because it's not like it's doing anything innovative like Nvidia. It doesn't have like a huge R&D department. They're just standing up more locations, having better connections with like Disney or whatever they're doing, right? And they're producing more revenue. And a big reason they've been so massive in their growth is because their revenue projections have just been getting blown out of the water quarter after quarter after quarter, right? And it's like I think that there's still that opportunity to find those companies that are value companies like that. That's just not it like you just can't be following any of the buzz. You know, but like,
well, the S&P 493, which you take out the Mag 7, has actually underperformed the past like 10 years.
Right. The Mag 7 is drug it up, right?
Mm-hmm. Yeah. Yep.
By a lot.
Yeah.
You know?
And so the theory is if you get some of this reduction in, if evaluations for AI companies start coming down to a normal level, then the whole entire index would theoretically go down, right? Because that's what's currently just kind of propping everything up. So time will obviously tell, but, like this, the Warren Buffett used to call it the cigar butt method. He basically, you could find companies that traded below their book value. So if you're a real estate company, let's say you own $5 million worth of real estate, and you could buy that whole company, whole portfolio for $4 million. Mm-hmm. Like, but because of things are not as asset heavy anymore, there's more IP and stuff like monetary and fiscal policy have just driven evaluations to the roof. Now you're paying $100 million for something that might be worth $5 million. Just with the expectation that's going to keep growing at an obscene rate. So
yeah, I feel like it's every asset though, right? You say the same thing about real estate. You know, like there's so much that's been carried just on the real estate growth in terms of like people's spending power and like local economies and different things. Because you think about it, if you're in a market where more than that, let's say the entire house market increased 2x over the last 5 years. Pretty much everyone that was a homeowner now has an asymmetrical advantage than everyone that wasn't at that point. You know, because especially if they like refinance or anything during that period of time, you got a bunch of tax-free cash, right? You have a bunch of security with like a lower monthly payment that you can live off of, right? You have the ability to sell that house and capture a bunch of money. That's going to bring up the cost of everything in a way that doesn't necessarily make sense. And so I think that's when people are talking about some of the affordability issues and different things. The problem is it's not taking into account the people that, yes, they are spending, 60% of their income, 70% of their income every single month, but they also made $350,000 a couple of years ago when they sold a house at peak market, or they cash out refinance and they pulled out a shit ton of appreciation they didn't actually deserve, And so it comes down to like, what is the actual health of the economy? Like, is that just like the debt economy that's pushing things down? Like, how overinflated are a lot of these assets, and has it like falsely propped up a sense of security for a lot of people?
I mean, I think the answer to your question is directionally yes. And my opinion is that it's been monetary policy mostly up until the past couple of years that has driven a lot of asset price inflation.
Fucking Jerome Powell, man.
I mean, even Janet Yellen though, even before her,
he was actually really bad.
Yeah, and so like the zero interest rate policy, and people can just borrow at nothing, put in assets that yield. I mean, the carry trade, how that is termed, never had more of an opportunity to shine than it did post-COVID.
Sure.
And I think that created a lot of wealth inequality. And there's the people like us who kind of figured it out. Like, and should we feel bad about that? No. But like, there's also people who didn't know.
We should take money from wealthy people and give it to poor people.
Right. Then you can do that whenever you want, Dan. You can write checks to whoever you want.
I do, dude. I have to write checks to the government, then they just give it to other rich people.
I was about to say, yeah, we do it all the time. Technically, we all write checks and we give it to the poorest person of all that's in, $25 trillion in debt. Yeah.
It's like 33 trillion.
Is it 33 now? Jesus.
Yeah.
But
I did want to ask you, because we were talking about data a little bit before we got on the started recording.
Mm-hmm.
I had a real estate agent who's been an agent for a long time basically asked me this question, and I don't know the answer. I'll see if you know. How much of the sales data that the MLS has is skewed because more and more deals are getting done off market than before? It's not only it's a supply and demand on the MLS, but just less people are going to the MLS because real estate investing and wholesaling has gotten more popular over the years.
I think it's infinitesimal. I don't think it's big enough.
I don't think so either. I mean, like the old sort of like pitch that like Brent Daniels and those kind of people would say when they were trying to sell you wholesaling back in like 21 was that 7% of all real estate transactions are off market, right? And their whole thing with that is like, this is X amount of millions per year. If you did like this many per month, like, or per year rather, then you would be rich. That was what they used to pitch people. I would imagine it's increased from that a little bit, but like it's not like it's going to be 30% or something crazy.
Yeah, and like a lot of those might just be those non-arm length transactions, which maybe that skews it down. But those are probably always there, where people are like, oh, I'm selling to my sister or my brother or whatever. And like wholesale transactions, I don't feel like in Spokane. Like I feel like probably there's less wholesale transactions going on in Spokane now than 2 years ago. Feels that way, anyways.
Yeah, I guess the overall question is, what percent of every transaction is whole transactions, and would that skew data that maybe the MLS and realtors and et cetera are relying on?
Yeah, my guess for our market, and I can't speak across the nation, is like maybe 5%.
Yeah,
so,
of all transactions are off market.
So I can't even ask fucking Google AI. So some estimates suggest between 10 to 30% of homes. I'm like, that's such a huge range. Like that's not, do a deeper dive AI mode. You gotta, I was going to sit here and spin. So this says off market, according to NAR in 2019 was 10%.
How would even they know unless they're manually scraping data?
See, that's like, the problem with all this stuff. You need to look at where the data is coming from, because also too, if you look at NAR now, I bet they would say a significantly higher percent because they are being threatened.
Right.
That's why you're seeing all these changes in laws. This is a big thing in Washington right now, starting next year. Every single real estate transaction has to have an agent involved. And so otherwise there's like all these rules that are just like silly. So like in Washington State, it's going to be, if there's no real estate agent involved, then you have to have in your contract that the seller is allowed to have an appraisal. And then you as the buyer has to pay for the appraisal. And then after they get the appraisal, they have 5 days to decide if they want to accept your offer or not. But that all is waived if you have a real estate agent who's a part of the transaction.
Yeah, to me, that's just asking for more conflicts of interest.
Of course it is, but but the real estate's never like the real estate agency, fucking whatever, you know what I'm saying, industry has never cared about that before, right? Didn't Keller Williams just like lose a big lawsuit?
Yeah, I mean they did a couple of years. Like, wasn't that the whole commission thing that I don't know.
Yeah.
Like,
so it was. Yeah, commission lawsuit in February 2024, the antitrust stuff. Oh, I guess they were the main ones that were behind all the antitrust stuff was Keller Williams, isn't it?
Yeah, there was a couple. Yeah, the Berkshire Hathaway, I think Coldwell, I think the biggest brokerages that you can think of, right? But I mean, I don't know. My soapbox here is I see a bunch of realtors shit on wholesalers because they're like, you don't have any ethics. You'll do whatever you want to get some money. Yeah. And yes, some of that is probably true. That's true probably in any industry. But at the same time, if you're a buyer's agent, you don't get paid unless someone buys the house. So you are probably even unconsciously trying to get them to buy it, even though it might not be in their best interest.
Yeah. And see, and that's, I mean, whenever people push back on things in that way without like actual evidence, it's because they're threatened. Right.
Yeah, it's because they're threatened and they're uneducated. Just get better at your job as a real estate agent. Don't worry what other people are doing.
If you are a real estate wholesaler and flipper and you want to be around other people that are looking to grow and expand your businesses in this ever-changing economy, then you need to check out our Scale community. Go to collectingkeys.com/scale and you can get all of the details there. But long story short, we are a small, tight-knit little group of serious real estate entrepreneurs that are looking to really make massive income and not just passive income through this ever-changing economy. So if real estate wholesaling and flipping is kind of your thing, go to collectingkeys.com/scale. You can book a call with me in there if you want. I'd love to see if you'd be a good fit.
I found a Zillow article. So it said 96 pocket listings accounted for 2% of transactions, and off-market transactions were 9.5% in 23 and 24.
That's
in
actually
Spokane, there was
high.
Spokane last year, there was 5,600 MLS transactions. So do you think there was, say, 600 off-market deals in the Spokane area? That seems reasonable.
Sure. Yeah.
Say some of the big wholesalers are doing 50 in, each. And then, you've got a bunch of little people out there and you got all these mom and pops doing just like intra-family like transfers and stuff like that. Yeah. Seems reasonable.
This Washington Post article that said it pulled directly off the MLS, and it said depending on the market, was averaging between 10 to 15%. So up from the 7% that Brent Daniels used to sell, but still not outrageous.
Yeah.
It's always hard to tell because you never quite know what's truly arm's length, what uses an agent. Also, there's stuff where an agent does get involved that are not on market transactions. Right, but those would probably appear the same on the back end. I don't know. But relatively small, though. It's not like it's all of a sudden 50% of them are off market because wholesalers are buying them. If it ever gets to a period where 50% of the deals are being done by wholesalers, just know everybody's fucked because that's really bad. Honestly.
There's something you said for there's probably, there's an end to how much houses should be wholesaled, right? Like other people should go on market, and that's not going to be 50% of transactions.
Yeah. I mean, and especially when the market's hot, like in 2021 and 2020 to 2022 period, pretty much nobody should have been selling to a wholesaler, honestly. You could have put like a bag of garbage on the corner and sold it for over asking price. Now, I actually do think it's a pretty valid option for people.
Totally.
And like we have never seen more leads that are like on MLS leads than we have over the past 60 days. And the houses are generally fine. The problem is they're just not updated compared to the house in the neighborhood. And even if you're like at a slightly cheaper price, people can go and they can say, well, this house down the street is $350. It's fully remodeled. Your house is $330. So it's $20,000 cheaper, but it needs like a new kitchen. It still has like 1970s interior, whatever. The average home buyer right now, they're going to go and they're going to pay more money because on a monthly payment basis, they can probably afford the difference there. And they know that the cost to get the work done with an increased cost of materials, increased cost of labor, and just general headache of having to find people to do it is not worth it.
Yep. And my biggest, the deals that we've been able to close lately have been, one, we've been allowing 2 to 4 weeks of post-closing occupancy. That's a big one. And then honestly, just being willing to buy with tenants in place.
Yeah.
Again, an occupancy issue.
That's a no-brainer right now. Like I don't know the last time we had a deal that didn't have that in some capacity, at least for like a very short span, like over a weekend. It's just impossible, you know, because people need the money to be able to go to their next location.
Yeah, that's what I found too. And a lot of stuff that, they're usually been in the house for a while, so they got all kinds of crap. And so the pitch is also, take whatever you want, but also leave whatever you want, and we'll take care of the rest.
Yeah.
So.
My favorite is when you get like the text or call saying like, hey, I cleaned out the house, I'm gone. And then you show up and there's an entire house full of stuff.
Yeah.
Like, what did you take?
The worst is like if you're not there for a couple of days too, and then maybe they cut off the power or whatever, but then you open the fridge for the first time.
Nuggets and bowl floor.
I'll always remember this one that Dan and I did where these people like stole an RV. Like they had to have stolen it because they had no money. They were the tenants. And literally it was them sitting in the 2 front seats in the RV. Oh my God. Like from their backs to the back of the RV was like completely full. Like the entire, like a bus full of stuff. And somehow the house still looked exactly the same. Like still hoarder house.
Shit there. That's amazing.
So they never made any sense. But there was like 5 washers and dryers in there. There was like just piles and piles of stuff, like 8 beds. I'm like, what is happening in here? They took none of it, but also cleaned the house out at the same time.
It doesn't make sense. And I'm at this point, I'm just unsurprised on what you walk into, how people can live, and not. No, I don't know.
Very eye-opening. I think that's probably one of the most common things that shakes people out of this business is when they first start getting leads and walking houses and they walk into their first like, holy shit. And they go, this is not for me. Right.
Right.
Yeah. That's always, that totally. We had people like come through Scale that are like that. That's always why before people get too involved in like building their brand or their company or doing like all the kind of romanticized shit of owning a business, I'm like, just talk to sellers. But what you need to get your first ass chewing on the phone where someone's just like real nasty to you for no reason. You need to get that off your back and you need to walk your first like, oh shit house. And then you need to make your first offer that is so embarrassingly low to what the seller wants that you're like physically uncomfortable making it. If you can get through those 3 things and not be shaken, you can do fine in this industry.
Yep.
If any of those don't work, then just go do something else because this is not for you at all.
I keep a mask in my car now because sometimes you walk in like the black molds on the wall. Like people don't usually live there, but I'm like, I'm not breathing this shit.
It's funny. You said that. I thought you were going to say so you could conceal your identity when you make bad offers. But you're like an ICE agent, bro. You're walking around with your mask on to like bring them your contracts so you don't have to show your face and how embarrassed you are.
There's a cloth mask from COVID that says "Let's go Brandon" right on the front.
I
know you do.
I don't, but that would go well with some of the people's houses I go in.
Hell yeah, dude.
Totally, man.
You got to get a little political. That's how you know you're going to do good.
Yeah. You got to just roll with whatever they're wanting to do.
Yeah, exactly.
We were trying to dispo a deal last week, and I showed up back to the property. And my buyer ended up backing out, ended up buying it anyway. But my point is, the people in Cincinnati are just dirtballs because she's like, once you... Like,
it's not just in Cincinnati; it's everywhere.
I love it. Yeah.
No, but she's like, I had so many people call me, like asking if I was selling the place and wanted to go direct. I was like, basically the day after that, I emailed, blasted some of it out. People just tried to go around me and go direct to seller to buy it themselves. Like, if I didn't find out who it was, but if I would have outed them on Facebook. But
you didn't find out. You definitely should.
Well, she was like, she's an older lady. I don't think she could even remember if she could. But
yeah, it's true. I mean, it wouldn't be shocked. It is shocking how often we like sign contracts and we're like through closing, we're getting to the end and they just have no idea who they're selling their house to. Right. Just because they've been hit up by so many people, they can't remember the company names. They'll remember like our AMs, right? Yeah. But they don't remember like the actual companies or brands. And then also too, if people are prospecting, they'll have like fake names, they'll have VAs, they'll have, you know, people that aren't actually involved in the transactional process. You can't loop things back to them.
We had one this summer where the guy wanted to retrade us. So he started calling the postcards on his counter and he called us and asked us for an offer.
Yeah. And Dan went and got it locked up.
That is awesome. I love that.
Yeah. So, well, no, there was, after we made our offer, this is actually pretty bad. So we made our offer. The guy didn't like it. He was real nasty about it. And so we started calling through the postcards. One of them, just because he was in our system and where he was, it went straight to Dan's cell. So Dan answered it, knew who the guy was, played dumb, went and showed up at the house because he hadn't met Dan yet. And Dan, you like really lowballed him, made it sound like so bad. And then he came back to us and we closed the deal. Because the offer that he got from you was so much worse. I don't remember
what price it was.
You basically anchored him, anchored him, thinking it was somebody else. Yeah.
And then all of a sudden he was like, oh, damn, okay, I guess I'll go back to these other guys.
I guess his $50K offer doesn't sound so bad.
Yeah. And then because the industry is such amateur hour, most of the other people never even called him back.
Yeah. Oh, we've got one where they call back and like, is Dan there? I'm like, this is like, you definitely called the wrong person, but like, hey, how you doing?
Absolutely.
So and I end up closing some of those too. So
I think it probably plays into our favor because we have a DBA for our marketing name versus what we actually sign PSAs on. So when they they'll go see our postcard and they're like, well, I have a PSA with Elevate. I'm going to go to Backyard Home Buyers.
Yeah. Makes sense. One other thing you guys want to talk about if you got time?
Let's do it.
I have this lead in the CRM that's been there for like just under 900 days. And originally he had a 4-unit building that was right next to 2 of my duplexes. Well, he sold that, but it turns out he has like a just under 16,000 square foot office building, decent part of town. He's older. He inherited it from his dad. And long story short was we had coffee for the first time this morning. Now, I didn't get anything signed today, but it looks promising. I'll just say that. But the moral of the story is his main business is he runs a car dealership around Cincinnati, a couple of them. And we just got to talking about the economy, kind of things that we were just talking about earlier. And basically his repossession rate of cars in 2025 through the same time point is up about 3x than where it was last year. Mm-hmm. And it was that was about 2x from the previous year.
Oh, wow. So it's up, like, go back 2 years, 6 times?
Yeah, exactly.
Worse.
Wow. Yeah. And I asked him, he was like, we're not even that, like, it's a used car dealership, but so he's probably selling to middle class people anyway, but they do 0% financing out the gate, a couple thousand down. And then but then the year goes by and then, it accrues. So
yeah. See, that's the problem, right? Is you're seeing like the junk loans for the auto industry over the past couple of years really start to come crashing down. Because like some of the payments and stuff people are making on some of these vehicles are crazy. And it's like adjustable rates and like different things. I see this Instagram feed. I don't know if it's like satirical or not. It's always like these trashy people, and they're like, "How much you put down on this car?" And it's like $2,200. Like, what are you paying per month? $600. And for how long? And it'll be like 384 months.
Yeah.
I'm like, what? So
yeah, it's always been there. So when I was in the military, all the used car dealerships, they would you'd legit get dudes, 19-year-old guys that are making $800 a month, and they've got a 24% interest payment.
Oh my God.
I'm not kidding you, like shit like that. And like they would sell them like a used Mustang convertible for like
that's all this shit is.
Like 50% more than it's even lists for. Like so they're like always like that. But then times get tough and people can't make their interest.
I mean, that's credit card rates, bro.
Oh, 100% predatory. Yeah, they have that, and they have like lawyers, or not lawyers, bail bondsmen, and every scummy thing you can find right outside the military base, and they all charge a lot. Strip clubs as well, but those are reasonably priced.
Yeah, I remember. So I grew up in Montana, and there was a period of time a couple of years ago. I would go home, and Montana has a very large Native American presence. And there was this commercial that would run on the local TV. My parents are older; they watch like cable news, right? That's just like their nightly routine. And I would see this ad that would come up on the local news, and it was I don't know if it was like a credit union or a private lender, what it was, but it was specifically for Native people. And so like it had this whole thing, they have like the presentation, all sorts of stuff they did. And then if you looked at the very bottom, there was this teeny tiny print. And on the tiny print, it said, interest may meet or exceed 18,000% on the money. Yeah. I have like a picture of it somewhere, but it was like, I was like, how are they? I was trying to figure out if I was like reading it wrong or what it was, but I'm pretty sure it was like payday loans that was like specifically for people that were from the tribe. And it was the most like predatory thing that I've ever seen. Cause like the whole pitch was like, oh, you can get your money now. You can like get your money for like the next like couple of months that you're going to get paid now. But the interest that they paid on it was like insane. Like there was 6 numbers before the percentage.
Oh my God.
So that's a lot.
I'm like, that's like the mafia, dude. That's like, yeah, you're going to, pay us. We'll give you your money now, but you're going to be paying us back for the next 10 years or we're going to break your kneecaps.
So repo rates are up.
Yeah.
What else is up in the debt space right now?
Credit card volume's at an all-time high, but that's a little bit of a misleading metric. I think you have to look at that compared to income.
Yeah.
And compared to inflation, I mean, it shouldn't be like 10% higher than last year?
Technically.
Yeah.
It's cost 10% more.
Yeah.
I mean, rent's certainly not up. I can tell you that.
Yeah, rent's not up.
No, dog.
Property
units
taxes
for like 20% less now than we were even a year ago. It seems like it's stepping down.
Yeah, but taxes on everything are up. Although I am very excited for our tax assessment next year because I'm pretty sure the tax on all of my property are going to come down, which is great.
Of course not.
I think they will.
Come down. No,
they have to. Yeah, I think they will.
You'll have to fight it. They're not going to do it automatically.
I have one that's come down because they
in a significant way.
Yeah, this house that I'm in right now, because when it's a new build, so I underpaid on taxes for 2 years, and then the taxes went up a shit ton for the third year that I was in here, and then this year they actually came down. It was like $250 a month.
That surprises me because I don't think there's a chance in hell any of my properties will go down.
Yeah. Well, that's what you get for living in a backward state like Ohio over there, Dylan. Over here, they're very progressive.
Not in my neighborhood. They're not.
Well, that's because you're in the county. You're on the other side of the line up there, dude.
Yeah, but it's all county taxes, dummy.
I'm just talking shit. I'm also in the county, even though the end of my cul-de-sac isn't.
Is it really?
Yeah, dude. Dude, it's wild. The freaking trash truck from the city
drives. You, bro. They don't want you voting in the city.
The trash truck drives past my house for the city, goes and like picks up the trash bins in the cul-de-sac, and then leaves. And then we have to wait for waste management to come. The worst is in the winter because they get plowed. Right. And we don't because we're in the county. And so what'll happen is you'll have the snow plow that will drive down our street with this shovel up, get to the end of the street, do the cul-de-sac, turn around and drive away.
That is
and like It's so dumb.
Literally redlined you, man.
They did.
I bet the people
for
on the cul-de-sac are even pissed off about that, though. Because if you're the only in and out, like that doesn't help them, right? Like,
no, it doesn't. It helps nobody. It helps nobody.
So silly, dude. So silly.
So, but I bet they'll come down though. It probably won't be significant, but like the tax assessed value on some of my properties has dropped like close to $100,000.
Yeah.
Wow. The biggest thing that a lot of Wall Street analysts look at is credit spreads with like corporations, and those are like thin tight right now. Like would be no indication of a recession. So like you can see one metric here that's like looking a little toppy, and you can look at one over here and be like everything seems perfectly fine.
Yeah. Well, and then from the economy standpoint, this is where the conversation Mike and I had earlier about kind of like how the stock market doesn't seem to work like it did 20 years ago, right?
It doesn't. So
right. See, that's a good observation by my dumbass. But like you just look at it, like if the Fab 7, they get all the capital flows, and then you look at like places like Berkshire and Apple, and they've got hundreds and hundreds of billions of dollars on their balance sheets, like in cash, like. They could just do stock buybacks, or they could reinvest into a new market or do something, and it's going to continue to drive the index up, which is the main index everybody's tracking, right? And then the NASDAQ is part of that as well, getting drug up by like NVIDIA and stuff like that. And so it's like if they have all this cash available, like in the financial sentiment, economic sentiments based on the S&P 500 or the Dow Jones, then it's kind of like a self-fulfilling prophecy at some level. And I don't know where it breaks or where it stops or where individual consumers' credit becomes a problem, whether that's with car loans or credit card loans or mortgages. Like where does it stop?
Well, I think if you're thinking through it, everyone's most recent memory is like with any significant drawdown is 2008, which was a global phenomenon, which was like the elevator down. Historical recessions are more like a stair step down, right? It doesn't have to be this big plummet that just happens immediately. And because it was mortgages and a global thing last time, it could just be segment by segment this year. Certain things get overvalued that become back to normal or undervalued. And so I'm not one of these people that say I do think there will be a correction, but I don't think it's going to be anything like 08 was.
It doesn't have to be immediate, right?
Yeah, it doesn't have to be immediate. It might play out over time, over years.
Well, of course. I mean, and this is always the thing with history, right? Is people always like to cite history for what's happening right now. The problem is that you can analyze history in 15 minutes when in reality it took a very long period of time, right? And so, like for years, I feel like, I think is such a douchey thing. I don't know. People have like compared the United States to like the fall of the Roman Empire. There's a whole thing of like, how often do you think about that if you're a man? I'm like, well, I'm not a fucking loser, so I never think about that. But
you're thinking about it right now, nerd.
I am because I looked it up as a common thing. So the collapse of the Roman Empire took roughly 296 years.
Yeah,
right. And so you can go back. That was a very long period of time ago. But like, let's say even if if it's 1/100th of that now, that's still 3 years, right, for something to happen, which is fundamentally a pretty long period of time when you're living in it day by day. So,
and the other thing is everyone calls for the death of the dollar. Like that's the biggest headline you've seen really since 2008, since they started doing this. But if you listen to people like Brent Johnson, Luke Groman, Lynn, all these like analysts, they're basically like, where else are they going to go? Yes, there's BRICS, which is like Brazil, like China, India.
Corruption, where there's no rule of law, all these sorts of things.
Right. The global trade has to take place in usually one currency, not several. And it's still going to be the dollar. It's not going to be the won. It's not going to be the rupee. It's not going to be this any other metric. Like global trade will still happen in dollars for a very long time.
It will amongst the Western community, right? So BRICS is Brazil, Russia, India, China, South Africa. And if they decide
which ones of those are not known for corruption?
Well, it doesn't matter. Right. It doesn't matter if they're known for corruption or not, because the unfortunate thing about the real world is the bad guys can win. It's not a fucking James Bond movie.
I don't know that I believe that, though, as far as like what matters. Right. Like, I think there's a lot of things people talk about with China and Russia and all these things. And China obviously is the leader and all that. But like, I just don't see that anytime soon.
Well, so if you think between those countries, they're 40% of the world population, if not more?
Probably a little bit more.
Yeah, but you could so take India and Brazil out of that.
But
so we have China, which is still still with them. That's going to be 30% of the world's population.
Compare population to GDP though. China will be up there, but the rest of them won't.
Yeah, and that's kind of my point. Is like you have like Brazil. Okay, they're big. They've got a lot of good economic factors, but the corruption's so high there. It's so dangerous. Nobody's going to make that a financial capital of the world. They're not going to do anything meaningful over a long period of time. India, they're talking about,
It's 56% of the world's population, by the way.
Which makes sense.
That's a lot. Yeah.
India, I mean, if the U.S. decides and U.S. manufacturers decide to move stuff from China to India, that's a big swing the other way from the whole BRICS theme, right? And that's where I'm like, I just don't see it. To Dylan's point, the dollar for at least the foreseeable future that I'm worried about is going to just be the thing. It's just too hard to get away from right now.
Right now, yes.
A lot of fear around it.
The problem with the yuan, the China has the CCP, which is the kind of, or PCOB, sorry, People's Bank of China. They manipulate the currency all the time. So like, why would, and right. Because they're a top-down economy. So why, if you're doing trade with them, they're going to say it's this one day, but next week it's going to be something totally different. And that fucks up everything.
In their benefit.
Yes, of course.
Right. And that goes back to the rule of law. And then I don't want to call that corruption, but it's definitely not something that you can forecast and bank on, because if it's all going to be one-sided benefit, not that the US isn't always trying to do that, but we're just a little bit more open source with it. That's the only difference.
The US is doing exactly the same thing. Like the thing with a lot of those countries, they don't give a shit about the lower class, and the United States is rapidly moving towards a more open presentation of that.
If you even go back to the origins of how we got to the dollar being the reserve currency, there's, conspiracies out there that, it's kind of fucked up too, right? It's just how the world has been for 70, 80 years.
The winners get to write the history.
Yep. Mm-hmm. Yep. And that was post-World War II, which the United States wasn't ransacked because there's a giant ocean between the two continents.
Mm-hmm. Hell yeah.
It's true.
You're geographically better.
Yeah.
That's just facts.
Yep.
It is facts.
The winners write the history. That's why in the real estate space, you want to be a wholesaler and / off-market guy, because we're the ones making the money while all the realtors are going, they're taking all the deals. They're all going off market. I can't figure it out. Sucks to suck, realtors. You're basically the poor people of the real estate world. So.
You're losing.
Well, now we know what clip we got for the intro.
Oh man, that's a brutal intro right there.
Yeah.
So awesome. All right, guys. Anything else?
I'm good.
All right, buddy. People, who the fuck you are? You guys are my buddies.
Guys.
All right.
Call me your buddy.
Not my buddy
Fight
guy.
You if you weren't 3,000 miles away.
Yeah. I mean, from Ohio, I'm not too afraid. All right, guys. Well, thanks for listening, everybody. We'll talk to you guys next week.
Thanks for listening, everyone. If you want more from us, you can shoot us a follow on Instagram. I am at Mike_invest. Dan is at InvestorManDan. And Dylan is at Dylan_does_deals. Shoot us a follow and send us a DM to let us know what you think of the show.